Would you like to know a money mindset hack that can make you rich? Today, I'm going to share with you my mindset and how I manage my money according to that mindset that's made me rich. And it's very simple. A way I wish you to start thinking about your money is I want you to think about your money as a business, or I want you to treat your money in your household like a business. In other words, I want you to become the CFO of your household. And just like a chief financial officer, a CFO in a corporation, their job is to make sure the money's managed well in order to make the company rich and make all the owners and shareholders rich. That's the same mindset and the way to relate and what to do with your money in your household so that you can create wealth and riches from household finance. And contrary to what most people think, we do not create wealth in our business, we create wealth in our household. So here's how it goes. The way to think is called profit first. And if you're an entrepreneur, it's very likely that you've heard the term profit first. And there is an author, his name is Michael Michalowicz, and he wrote the book called Profit First. And I believe it's a must read for every entrepreneur because it teaches you how to think about money in your business. And Mike was featured on one of my podcasts in the Wealthy podcast. So in the description, I'll put a link to that podcast episode so that you can just listen in if you don't want to read the book. And it's an excellent conversation. And what's so interesting in that conversation that I had with Mike on the Wealthy podcast is he talked about this thing called profit first in your business. So this is your business. So I'm really simplifying here, but I'm simplifying so that you can get the point, that you can walk away with the profit first concept and how this mindset hack is the way to start thinking to change the direction of your money that's going to help you achieve all your financial wealth goals. So what Mike in the podcast and in the book talks about is that what happens to business owners, and especially startup entrepreneurs or those maybe newer in business, but even those that have been in business for a long time, is they work really hard to create this thing called revenue. So they do all this marketing and sales and publicity and all the things to try to sell their widgets to make all this revenue, meaning income of the business. So let's just break it down to you and me. And let's say that, hey, this month we sold $20,000 of units. Let's say that we sold 10 products at $2,000 each, and we earned $20,000 in our business. Now, what happens with many business owners is that they bring in the $20,000, but at the end of the day, there's no money left over because their expenses are $20,000. So they bring in $20,000 of revenue, but it took $20,000 to create the revenue. So there's what's called zero profit in the business. And Mike tells his story about how his business and many businesses, he'd just find himself in that place and he'd be in the grind and he'd be stressed out. He had these enormous revenue months and he'd walk away without any money. And it finally came to him is that I need to pay myself first. And maybe you've heard that, pay yourself first. And that means profit first. So what he discovered for himself and then taught others through his book, and now millions of other entrepreneurs are following this profit first methodology. It basically says that what we're going to do is off the revenue, we're going to take out something called cost of sales. And cost of sales basically means it's not your money. In my last video, I think the last video that I released, but it's the video that's the 10 categories of money. And if you want to get a very detailed description of how this works, explanation, go to that video where I talk about all 10 categories of money that's really important for you to understand as an entrepreneur. But for here, in there, I talk about what cost of sales is and how to think about it on your books. But cost of sales is basically, it's not your money, meaning that money belongs to somebody else. So let's just say I bring in $20,000 this month because I sell 10 courses for $2,000 each. And let's say that I have a 10% referral fee that I pay on every unit that I sell. So that means I'm paying $200. I'm paying $100 per unit for 20 units, which is $2,000. So that means it's not my money because I sold the unit, but I have to pay a referral fee directly. So I don't get to keep any of that. The business doesn't keep any of it. So that's typical on regular profit and loss statement. But then what the profit first concept says is the next thing you take out is profit. So profit means if you say like, hey, I'm going to pay myself $10,000 a month. That's the profit I'm going to keep for myself for all my hard work in the business. I'm going to pay myself first. And so out of this $20,000 comes this $10,000 expense, which goes into what's called my profit account, basically. But I'm moving money out of the main business account into the profit account and getting it out of the business operating account off those books. So then what we have left over is then we have, in this case, $8,000 left over. And this $8,000 is then what can be allocated towards expenses. What that means is that I have to manage my expenses, my business expense really tightly to make sure that I'm able to pay everybody else I owe up here and to be able to pay myself that $10,000 profit. So we're paying all the other people we owe, meaning that are attached to these transactions, we pay ourselves first. And then to operate the business, we have to manage it very tightly. That means we're going to be in our books and we're going to really have to watch the money. It's impossible to do a profit first system like this if you're not paying attention to basically every single dollar in the business. So that's how this is. Now, again, I'll just put over here what a normal profit and loss looks like. But basically, it would be revenue of $20,000. Let's say that we have those cost of sale of $2,000. Then we'd have $18,000, what's called gross profit. And then let's say we take $8,000 of expenses out, and that would be $10,000 left over as profit. So that's how a normal profit and loss works. I know that was very fast, but you can go to the other video to get more reference. But in the profit first mentality over here, we're hoping that, we'll have $10,000 left over after cost of sales and expenses. But many times these expenses, when we don't do it this way, if those expenses end up being $10,000 because we didn't pay ourselves first, then we only have $8,000 left over to pay ourselves. So that's why we want to pay ourselves first, to make sure that we pay ourselves the first amount, because as business owners, as we know, it's really easy to walk away month after month without paying ourselves or paying ourselves enough. So that's profit first in a business. Now, like I said, the money hack for wealth creation that happens in personal finance means we want to adopt that same mindset of pay myself first and methodology for how we manage our money in our household, just as we do in our business. So it was interesting when Mike and I were on that podcast together, he was talking about profit first. And I said, yeah, I've run more or less a profit first type business in my business for a long time. He's got a very specific methodology that I don't follow, but I did something pretty similar to that. But what I mentioned to him as well is that, Mike, what I teach and what I've taught for a long time, because this is what I've done for myself, is I teach, and what I do is a profit first system in my household. And that profit first system in my household is what's created all my wealth. And he was really intrigued by that. But we had a really fun conversation because we realized that we really do have the same mindset methodology. He just teaches it for business, and I carry the same thing over to household finance. Because the same money rules apply. No profit, no wealth. If you have no profit in your business, you're not going to have enough money to pay yourself to ever have enough wealth. So in business, we always need this thing called profit. And in this case, we want profit first. So now what happens? We're going to move this profit that's out in that profit bucket, basically, in the business. And we're going to move it over here to our household. So now our household, how much does our household make? Our household just earned $10,000. We paid ourselves the profit from our business. So this is the profit. The business made 20, but we're keeping 10 of that, or like a 50% profit margin in this case. So now this goes over to the household. We deposited $10,000. Yay us. Had a nice month there. And now, same thing. We want to pull out what's called the cost of sales. So what would be a cost of sale, meaning not your money in your household finance? Now, any guesses? So cost of sale here would be your taxes, because that's not your money. So over here, just in the case, like if I have to pay an affiliate or pay a referral fee, $100 for that sale, that's not my money. It belongs to the person that referred that sale. So over here, we don't get to keep all of our money once we pay ourselves. A portion of that goes to Uncle Sam. So let's just say in this case, the cost of sale is $2,000. And we move that over to a tax bucket. We get it out of our main account because we want to make sure that we're saving that money for taxes and that we don't spend it. And then what's the next thing we take out? The next thing we take out is the same thing, is profit. So we take out our profit. How much profit should you take out? That's your question. So let's say you've answered that question, and here's just a little bit of data for you. The last that I checked, and the statistics are somewhere between 6.8% and 8.8%. So I'm going to use, when I checked ChatGPT today, just before this video, ChatGPT told me that 6.8% of Americans are net worth millionaires. So if this is true, I found another statistic that said 8.8%, but somewhere between 6.8 and 8.8% of Americans or Westerners are actually net worth millionaires. That means far fewer than 90%. I mean, over 90% of Americans don't have $1 million. But we all aspire to be millionaires, multimillionaires, in many cases, billionaires. I mean, my goodness. But these are very low numbers. So that's why I'm doing this, creating this YouTube channel, is hopefully give you money education and knowledge and new ways of thinking and managing and investing in all things with your money so that you can be part of the 6.8%. But everybody's working hard to make a lot of money to become millionaires. And why are so few people millionaires? And I believe it's because we don't understand what's required to become a millionaire. And all of my videos are really teaching all the concepts to become a millionaire yourself, what I call a net worth millionaire. And a net worth millionaire means you have assets worth $1 million that will pay you, that can pay you dividends or pay you interest so that you can live off the interest, which is called passive income. So in this case, let's say, how much profit do I need to take out? Over here, I determined I wanted to pay myself $10,000 a month. That's the annual kind of salary I need to make for my household. And I'm going to manage my business accordingly. And over here, we might look at and say, okay, I want to be a net worth millionaire in 20 years. Let's just say I'm 25 and I want to be a net worth millionaire by the time I'm 45, as an example. So then you can go to ChatGPT or go to a compounding calculator and determine how much money do I need to invest on an annual basis to be able to be a millionaire in 20 years. And if you do that, I'm rounding some numbers, but what you'd need to do, if you invest $2,000 per month or $24,000 per year for 20 years, you will be a millionaire. And this is what I call the get rich slow methodology, but it's important to understand because everything you see on the internet makes it sound like it's flipped, that only 6.8% of Americans are not net worth millionaires, and that it's easy to build this wealth and do these things. But the statistics show us otherwise. But the reason why is because since we don't understand how compounding money works, we keep pushing or kicking the can, I guess, to try to worry about wealth later on while we're trying to get rich quick and do all these get rich quick things. So we can try to get rich quick while we also build wealth slow. So I advise you do both those things at once. But in this case, if you invest $2,000 a month, you can become a net worth millionaire in 20 years by some more traditional finance, for example. So in this case, you might be like, okay, that works for me. So I'm going to take out $2,000 per month, and I'm going to put it over here in this investment bucket or this profit bucket, for example. So then you do the same thing. So that what does that do for us is that we then have $6,000 left over. And this $6,000 gets to be our personal, our household expenses. And then what do we have to do? When we do this, we have to manage our money very tightly to make sure that we don't spend more than $6,000 per month for our household expenses. That's everything. So you'll see, like, okay, doing this method, I have $8,000 I get to spend in my business to make the $20,000, and I get to spend $6,000 on my household to make sure that I get to build that wealth and become financially free in my future. In 20 years, I'll have enough, and that's it. So again, to sum all that up, the idea is we want to pay ourselves first in our business and pay our future self first in our household, and adopt this profit first mindset. And I guess what goes along with all of this that I haven't really said explicitly is the only way to do this is you really have to manage your money, and to manage your money well. But you'll only manage your money if you have the mindset that I want to be wealthy and I want to be a net worth millionaire, and I'm going to learn my numbers and manage my money accordingly. So you'll manage your money once you set up these goals and targets and you get very serious about it. All right. So profit first. Things to do, as always. Hopefully you're subscribed, but go ahead and just press that thumb button, press the like button, and all those likes let me know that you're really enjoying the content. So please do that. In the description, I'll put a link to the Profit First book in the event that you want to give that a read. I'll also put a link to the podcast with Mike McCowitz, which is the author of Profit First. So I'll put a link to that if you wish to listen in. I think it's just such a great episode. And finally, if you want to take my Money IQ quiz that will kind of test you on things like this and other few questions, it's just 10 questions, super easy and quick to answer. And what that will do is it'll take your answers and it'll give you a score to let you know how well you know your numbers, or where there might be some work that you want to learn more numbers. And attached to that is a guide that will help you determine how much money is enough. That basically is another way to say, what is my profit first number? As always, thank you, and I'll see you next time.